Stock market's making all-time highs, but let's be real here. Most people aren't ready for what's to come. We have a risk-off move right around the corner. And I'm going to prove it to you on all of these charts. You're going to want to pay close attention, bring out the notepads. You can revisit these charts in the video. I'll have them timestamped in the description below. Let's just go ahead and get right into today's show. What's up, everybody? Welcome back. First off, I didn't introduce myself. My name is Michael Silva. If you're new here, welcome to the channel. If you've already been here, awesome. Appreciate you. Thanks for all those kind words going into the holidays. New Year's just around the corner. This is the Pring Bottom Fisher. What am I talking about here? Well, in the last couple of market briefs that we did, we talked about it potentially crossing over. We called it out before it did, and that could create some sort of a squeeze higher to all-time highs. Today, we got the all-time highs. Okay, but notice how each time that this happened before, we had even a larger short squeeze than what we've currently seen at this particular point in time. Sorry, right here. But then we had full corrections back into that regular territory. So can this move potentially move higher? It's very, very possible going into the end of the year. We're typically seeing less liquidity, and then going into the next year, we might see sales of certain assets at the beginning of the year, and that's to kind of just roll the taxes over. But we have some very important charts to be going over and some different type indicators that I want to just show you going into this risk-off move, and why I strongly believe that we're going to be seeing some increased volatility here very, very shortly. First off, let's look at the daily S&P 500. This is the SPX. Okay, you're going to notice these two different indicators down here. If you don't follow me on Twitter, you can follow me there. I kind of threw up the charts just a little bit ahead of time, and I showed some examples too. First off, I got the Bollinger Band overlaid, and then what we have right here is a breakout of this upper channel. We said if it breaks up, we can go a lot higher, right? Well, we gapped over it, and we're disconnected from the 5 EMA. We're up at the upper range of the Bollinger Band. This is what's important and why I want to show you so many different things today. Notice the BB width right here. This is the Bollinger Band width indicator. Okay, you can use this too on stockcharts.com. It's completely free. Notice how it's below 4 right here. This is basically stating that the Bollinger Bands are tightly contracted. They're narrowing, and when things get narrow on the Bollinger Bands, it can foreshadow a potential large squeeze in the Bollinger Bands. So when we get to these squeezy levels right here, when they contract, typically you can see a very big increase out of nowhere. Now, to the downside or to the upside, that's to be determined. So I want to show this. What you need to do when you see these low levels on the Bollinger Band width and you see this contraction, you got to map out support and resistance. Once you map out support and resistance, you want to look for breaks above it or even breaks down below it. Okay, and then you want to also use something like on balance volume, or you can use the MFI, you can use the CMF, you can use just volume. There's a bunch of different things that you can use to kind of match everything with, because you want to make sure that a lot of things align in your favor before, potentially just getting head faked. So the Bollinger Bands are very contracted right here, and we're going to be seeing this theme throughout the show. Bollinger Bands are extremely contracted, but we did break above an area of resistance and made an all-time high. Is this a head fake? Well, we don't actually know quite yet. We're still here at the upper range of the Bollinger Bands, but what I want to point out here is this. Bollinger Bands are still very tightly contracted, and the on-balance volume is sloping downwards. Now, that means that the move up higher that we've been kind of creating higher highs right here, it's not being supported by more volume. As you can see, it's kind of dying off. So this is very possible of a head fake. But if it's not, that means the original indicator that we looked at, we can very well see a squeeze significantly higher. Now, when we get through more of the show, you're going to see a lot of the indicators showing risk off type moves. Okay, so you're going to have to really come to your own conclusion here, and I can tell you mine in the conclusion section as well. But first off, we broke above this little channel. So far, so good. But keep in mind, we're still kind of, if you draw a line from this high up to here, we can still potentially have some resistance up ahead, creating a little head fake. So let's watch to see what the Bollinger Bands do. Now I want to show you a little bit more zoomed out. This is the S&P 500 on the daily time frame, and I want to show you here from early 2020 to February. We had this channel. We were making an all-time high. Where was the Bollinger Band width at that specific time? Way down here. It wasn't actually even as low and contracted as we are right now. I know this because I zoomed in. Okay, so they were contracted very tightly right around these areas. We broke out of the channel and we traded up there for about a week, all right? But the Bollinger Bands remain pretty contracted, and that right there was an extreme head fake to move down lower. What we're seeing here, we're seeing a channel, all-time highs. We broke out, made an all-time high. It's going to be interesting to see how this plays out. The volume here is not supporting this move, the on-balance volume. However, it did support it over here. So these are just things to take note of. This is called a Bollinger Band squeeze. When they tightly contract, it can foreshadow, like I've already stated, a period of increased volatility, and that could be to the upside, but it can also be to the downside. And we're going to mix this in with other indicators that we have here on the 30-minute time frame. Have you been watching my market briefs? We've been saying that we'd have a target right around 37.50 to even 37.80. It can even go higher. Now, I pointed this out on Twitter when we started getting frothy up in this range. You know, it had to take a little bit of a breather. We came back below the level. You saw that little pullback. Huge gap up today. What's this gap up from? Well, probably just because of the whole signing of the stimulus bill. It was kind of this back and forth nonsense, right? Well, we want 2,000, and then he said we're not going to sign it till, but then they signed it about 30 minutes before the futures market opened up on Saturday, and what do you know? We all of a sudden see this rip rally. It's just a bunch of it's just crazy to see the market kind of react to these tweets. So it's very confusing time with a lot of hopes and optimism around the stimulus. Now, what do we got going on? I'm kind of going on a rant, but we have the $2,000 stimulus now just got passed from the House. Let's see what happens, with the rest of that going on into the new year. Okay, so that was the S&P 500. We didn't quite reach the target, but we still very well may. On a few market briefs ago, I actually talked about this weird glitch. We called it the glitch in the matrix, and it printed a number on the SPY at 378, almost 380, and we're like, I thought maybe that's the market saying that we might be reaching those levels before we actually see a pullback, but that's just completely speculation. Now, this is all, what I like looking at these charts for is because it's showing real data, right? Market price action, this is volume, we look at the RSI, it's all mathematical stuff that the market is telling us and doing. Now, we pointed out this rising wedge up here on the industrial average. This is the Dow Jones, and we've been tightly coiled up within this pattern. We have a little bit of a hammer candle, inverted hammer starting the week. The week's not over yet. This is the weekly time frame. But I wanted to call this out. Notice the top range, the top trend line of this blue rising wedge. See how it goes back into these areas right here? And we had support, support, support. We broke through resistance, 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 and it's being respected. Well, keep in mind that this very same rising wedge here from 19 to early 2020, if you follow this trend line back, we also had previous history of support, 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 resistance, 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 resistance. It was very well respected area of resistance. Okay, so I'm pointing this out now because this area of resistance is being well respected, just like this rising wedge was. Now, that doesn't mean we're going to get a breakdown, but like I said, you need to be well aware of this stuff. So if you're just buying at all-time highs, okay, and you don't have a plan other than just buy the dip, well, keep in mind, if you get a dip and you buy this dip, and then it goes down lower, and then you buy this dip, then it goes down lower, and then you buy this dip, and you're just, yeah, I got so much, it's such a great deal, and then you buy this dip, chances are when you get down to these low points, that's when you're like, okay, I give up. I think it's going to zero. I'm out. And that's also, if you pay attention to sentiment, which we'll get into on the indicators, that's actually the point where I'd say start getting in, because our indicators can sense these things. It doesn't time them perfectly, but it darn near does. It tells us when, people are way too bearish, that's when you should go bullish. And just like we're seeing now, everyone's way too bullish, and that's when you should probably pump the brakes a little bit. All right? Now, here it is on the daily time frame. I want to point out on this indice, we're looking at the Bollinger Band width here. On balance volume, kind of sinking lower. It's not supporting the drift higher. I would imagine on balance volume to continue to go lower into the new year, but that might not be the case. But why do I say that? Well, it's the holidays. We have a shorter week, this week too, and we had a shorter week last week. So it's going to be interesting to see how that plays out. But what happened today? All-time high, okay? We gapped up pretty significantly. We rammed up into this area of resistance that we already pointed out, and then we closed a little bit lower, a little bit of an inverted hammer, but that doesn't mean anything at this point. We need confirmation. So it looks like it can continue to drift up a little bit more, but watch for the break. Now pay attention to the Bollinger Bands. The Bollinger Bands, well below 5. They're printing at the width, 2.33. That is a very, very tight contraction of the Bollinger Bands. So my guess is if you look at these patterns and you look at resistance and support, when we start breaking it and it's confirmed, I would expect to see a significant move in 1 upside or 2 downside. But like I said, we got to bring in more indicators to help us determine where that might be. But just pay attention. This is a very, very tight contraction. And if you're aware of the Bollinger Band squeeze strategy, which was created by John Bollinger, the one who created the Bollinger Band, this, you don't want to just overlook these contractions, okay? Now on the 30-minute time frame, notice how I drew out this channel. We went over this many times before, and then we drew out this mini channel right in here, and we had the gap up, and then we broke above it. So that's a bullish sign, okay? We're bringing in higher lows, higher highs. Everything looks good. We kind of sold off a little bit at the end of the day right there, back to this, but we're still holding that area of support. It's going to be interesting to see how this plays out. Like I've already stated, on the Bollinger Band tightness that's contracting, it's narrowing, maybe it works out in the bull's favor and we see an aggressive squeeze to the upside. But like I've already stated, in the indicator section, we'll talk more about that. Here's the IWM, the Russell 2000. Hey, huge gap up on the day, bearish engulfing to finish it. It basically opened up at the high, closed at the low, still above the 5 EMA. This is pretty nasty looking move, but it's still, in theory, technically bullish because we're above the 5 EMA and that's been well respected. The MACD actually crossed over. That was a bearish crossover. We're way above 0, but we've been kind of just slowly rolling over here. If this trend continues, that can create more of a bearish move, and then we'd start probably filling some gaps below us. I'd say that the 20-period moving average, a reconnect to the 20-period, we determined to see whether if that holds or not, but there's a gap down there. Then you got the 20-period SMA that's at 190. That can get hit very quickly, and we might see a bounce from there. But we got to, just play it as time goes. Now, interestingly enough, I want to point this out too. I zoomed out. This is the daily time frame. Okay, you see that rising wedge all crunched up right there. Notice how on the PPO we're using the 200 right here as our the metric right here, so you can enter that into as yourself. But just notice how where we are, how we're extended from the 200-period moving average. We're just, you never seen anything like this in history. Okay, so we're super overextended, and when we reach overextended levels like this, where they go vertical on us, you need to be very careful because we can see some very sharp pullbacks. Doesn't mean that the all-time high is in. But what it does mean is you probably just don't want to go long right here because your risk versus reward doesn't make much sense from these extremes. Does that make sense? All right, monthly time frame on the IWM. This upper trend line, okay? Where did we hit? Well, this was 2001 top, recession. 2007 top, recession. 2018, okay? That pullback right there, that was some crazy times where we saw some big tech stocks also get just hammered. And now we're pushing those levels again. We peaked above it today, and then we really kind of closed on it. So we're in a position where we can squeeze higher above this. But like I said, we're going to be bringing in some other indicators right now to really determine, what's going on. And then you can see right here, we're using 110 because it's the monthly time frame. Clearly a huge overextension. We haven't seen anything like this either. All right, everybody, let's go into the indicators now. Okay, this is really to help us determine, hey, is this breakout real? Is this breakout fake? Should I be pumping the brakes a little bit? Well, we're going to go over all of that now. First off, the VIX. Okay, what have I been saying about the VIX? I've been saying that, one, the Bollinger Bands over here on right around mid-December-ish, right there, early December, we were saying that they were contracting very tightly. And when we look at the last times they contracted very tightly, we saw periods of high volatility, big spike, but you need no head fakes, big spike right here. Now look at here, okay? This was an area of resistance. I drew blue boxes around these areas just to show the low reading on the Bollinger Band width. So the lower they are right here, that means they're very contracted. And then you see this big spike above and then this spike lower. That right there was a complete head fake, okay? Notice how the Bollinger Bands did not go, they didn't expand, okay? Move up. Close down, now we're drifting lower. What do we say going into the end of the year? It was very possible to just see this thing kind of drift lower. Now we did still break above this falling wedge, which is a bullish thing, but like I said, we need to see here what happens in the very near future. The Bollinger Bands are still very contracted. If you can go back over to here, November to December, when it broke that resistance level, you saw that squeeze to the upside, broke the resistance level, boom to the upside, resistance, boom to the upside, resistance, boom to the upside. So if we start getting above 25, it's very possible that we start seeing the Bollinger Bands increase and we start seeing volatility really pick up, okay? Now, keep in mind also, this isn't like predicting anything. I'm just showing you what has happened in history, because when they contract, they can go either way, okay? You can see a huge rip to the downside, which, it would be interesting to see that, but it's still very possible, and we could potentially fill this gap. So just note, okay, where's an area of support that if we break down through it, we might head lower? Well, the area of support is right around 20, and then the area of resistance is around 25. So you got to look for the break and close above, and then you can make a more educated risk on your trading decisions. Now here's the CPC, smooth over a 10-period moving average. A little bit of a drawdown today. When we cross above the red line, that's when we need to say, okay, that's our sell signal. Every time it crosses above it, we've seen some sell-offs, at least in this time frame, right? Boom to the downside, cross right here, boom to the downside, cross down and then up, boom to the downside, cross up right here, kind of just down and then sideways. So it hasn't got there yet, but this is important to note. We're not far from it. Now we could head back down. That's very possible. But we need to keep a close eye on this, because if we start crossing above it, which we're not far from it, we're at 0.76. If it gets above 0.80, that is a warning sign there, or a sell signal. The next thing I want to show you is the utilities over the SPY. This is something that I learned in a research paper done by Michael Guyad. He uses a 4-week rate of change. And how it works is this. When it crosses below 0, you go the following week, you go risk on. When it crosses above 0, you go risk off the following week. Notice on the 4-week rate of change, okay, since December, we have been climbing up higher and higher. So if this trend continues, we could probably cross the 0 range by this week or potentially next week, and that would signal the following week after that would be a risk off move. That's his strategy, okay? So that would be indicating to us we got to be risk off. What does that mean? Well, you can go utilities. Utilities are really a good risk off play. Bonds, good risk off play. So you just got to take that in consideration. Don't believe me? Well, look at last time it crossed over right here. Boom. What do we see? Downside movement, all right? Now, this is a 4-week rate of change, so it goes back and forth pretty frequently. You can see it right here. Cross above, go risk off. Miss the entire move down, okay? Darn near. Even right here was a big drawdown, okay? I'm just looking at big drawdowns, but, you can go back and look at this too. Big move up right here. That goes risk off. Miss the entire move to the downside right here. That's a big, big deal. Okay, the next thing I want to show you is the lumber to gold ratio. All right, we're using a 3-week rate of change. He uses a 13-week rate of change. This is also, he read about this, co-authored an award-winning research paper. And he said to me on the interview, you can use 13-week, 3-week, but, determining, what your strategy is and what we back tested, the lower you go, it's going to make you more active of a trader. Now, that means you're going to be right more, but it can also mean that you're going to be wrong more. But this is what I want to point out, and I'll tell you where the 13-week is here shortly. The 3-week rate of change has been dropping since mid to late November. If we cross below 0, that means go risk off. We're not far from it, okay? The 13-week rate of change is pretty high up there still, so that has a lot more room to go, which could mean that the next pullback could just be, 7, 10%, and then we continue to make more highs, or maybe not. That's just speculation, but take note, if we cross below it, that is a risk-off move. Okay, when do we go risk-off? Well, last time we did was right here. That was in just before the before October, just mid to late September. And what do you know? You would have missed that entire drawdown right here, which is a pretty big deal. Okay, that was the September peak. And then what do you know? We crossed above right here. Then you would have went risk on, and you would caught this upside move. We went risk off right here, okay? This move right down here, boom, risk off. You would have missed the entire crash, all right? Big stuff, big deal here. Same here, you crossed above, and then you cross back below. You're risk off, risk off, risk off. You're risk on, and then you went sideways, then when we're risk off, boom, to the downside, and then you would have went risk on pretty much the following week, so right around here, right close to the bottom here in 2019. It's the lumber to gold ratio on the 3-week rate of change. Now, we're making all-time highs, okay? But what's interesting to me, we're making all-time highs on poor breadth. Minus 7.36 on the NYMO, the Nyse-McClellan oscillator. You can see all-time high and low breadth. When have we seen this before? Well, we saw it right here at this all-time high. We saw it back here in 2018. We see it often. But you need to take note that, that's not a good sign when we're just kind of drifting higher, but the breadth isn't there to support it. Now let's talk about some more sentiment. This is the NIM exposure index. What are asset managers doing? Okay, and then the RIDEX is right below it. Notice this kind of the lower this goes, which technically it looks like it's going higher just because of how I have my chart. That means very, very bullish sentiment. The higher this goes, extreme bullish sentiment. Well, what do we got going on here? Okay, coming into the end of the year, we're at 90. Okay, that's actually kind of where we were. Where? Right here in February and March of last year. You can see we had this big move to the upside. Sentiment was extremely good, and now we kind of seeing it kind of roll off a little bit here. All right, and then what do we see over here? This is very interesting stuff. In late December of last year, we also kind of had a negative divergence. So we saw the price action continue to go up. We saw them extremely bullish, and then all of a sudden, that kind of momentum there kind of faded out a little bit going into the next year. And then we saw that big fallback. These are extreme levels, and you could go above 100. It means they're using leverage. So they're still very, very bullish at these specific levels, but just take note that it's kind of dying off here. Now, the RIDEX hasn't updated yet. That should probably be around tomorrow, maybe later in the week. We'll see. But that's also extremely bullish. So if we start breaking, higher levels, that could indicate, okay, there's a shift being made from extremely bullish to, hey, let's let our foot off the gas a little bit here. All right, let's look into some commodities. So we went over a lot right now. Okay, now we're going to go over some commodities and the bonds, then the dollar. I'm going to move faster through this stuff. Gold, what do we need to watch for? We need to watch for a break above this gray dashed line. Clearly, resistance, 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 and today, resistance. Okay, we're still above the 50 period. Once we break above this, or if we break above that, that could send us to the all-time high. That should definitely take place. That would make sense to me, just given the pattern, the context. But if what's still in the cards here is a big drawdown day like this. Now, every time that the day passes and we're above the 200 period, the 200 period is going to slowly ride higher and higher. So that's also a good sign because that can act as the grandfather of support. But notice how the 50 period is contracting to the 200. You never know. That could be a death cross where the 50 crosses under the 200 and then we start heading lower. Okay. Given what's taking place, with the Federal Reserve and just all this stimulus and all this stuff, it just seems like we're going to be devaluing the dollar over the course of time, which it has been trending down over the course of time, which means that gold prices and commodities should go higher. Now, in the short term, from here, December, we have a low here, a higher low, and a higher low. So the trend since December actually is bullish so far, but it would be nice to break through this. Now, silver, on the other hand, silver today closed above this little stubborn area of resistance. Hey, that can shoot us up higher. That can shoot us to that $30 marker. Let's see what takes place here. That is a good sign for silver. You have the 50 period sloping up higher, 200 period sloping up higher. This was obviously resistance, support, 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 then the crash down. And then now we closed above. Is this a real move? Hey, it might be. We're putting in the higher lows right there. So far, so good. The MACD is turning up. We're positive. We crossed above zero, bullish trend. This is looking really good for silver so far. So let's see if this trend continues. Then we got Bitcoin. I'll go over this really quickly. We called out this breakout, the ascending triangle, actually before it broke out. Then we broke above, looked pretty good. Then we talked about what? But last time I actually did this, we missed a few days of this, but we said, look, it's too aggressive of a move so far. It needs to, one, pull back test, and then move higher, or consolidate. It consolidated, and then it broke up. What do you know? Boom, to the upside. Now this looks like a pretty sharp looking, shooting star type candle. So be careful here. If we start breaking below 26,000, we would go test 24,000 probably very easily as that, breakout, back test, and then potentially move higher. If it goes below that, start looking at the 50 period moving average for an area of support. All right, let's go over bonds. Bonds. Okay, we've been trading down lower highs, lower lows. However, since November, we're putting in higher lows. so far. Okay, is that trend going to continue, or are we going to break above this trend line and start seeing bonds go up? What would that mean? Well, that would mean yields would start going down. Well, if yields start going down, sometimes yields moving down can forecast what potentially might happen to equities shortly after. So, for example, when we started seeing the rollover in the yields over here in 2020, they were rolling over pretty sharply, and that was before the stock market crash. So if we start seeing these things start rolling over rather aggressively and bonds start to increase, maybe that's telling us and giving us even more of a heads up notice that the equity market might be in for some trouble up ahead. However, nothing's been confirmed yet. Spread is steepening. You have the 10-year right here, higher lows, and you have the 30-year, higher lows as well. It's trending up. However, it's really having trouble getting above 1. So really, since November, it's been going sideways here. So either we're going to start breaking above it, and we're going to start seeing yields increase and bonds continue to kind of die off, or it's going to break this trend. So it's going to be interesting to watch that. Now let's look at the dollar. The dollar, overall, the dollar is pretty darn weak. Okay, the trend is just bearish. 200 sloping down, 50 sloping down, 20 sloping down. The only thing that was bullish for it is this MACD crossover that's still below 0, so that's decent, and then the breakout of this falling wedge. Now, what's interesting about this breakout is it didn't quite get above the 20 period and it's been drifting a little bit lower, and it reset the RSI from being oversold. So that can really set us up for another move lower. Or if we continue to hold above this and we maybe get above the 20 period, we might go retest the breakdown area that we mentioned, which was about 91.50, or where was it? It was like 92. Yeah, it was 92, where we said if it broke down from there, we'll start seeing some more aggressive moves to the downside. Now on the weekly time frame, this week so far is looking pretty strong. You see a long upper wick. The week's not clearly over. You have a positive divergence in the RSI, positive divergence in the MACD, bullish looking pattern running into an area of support. Hey, if this thing starts breaking up, that'd be a pretty good sign for the dollar. Now that would put pressure on commodities, right? It would probably put pressure on equities. So it's going to be interesting to see how this one plays out. Even on the monthly time frame, I don't have that with me, but that was looking pretty darn bearish, as well. So like I said, going into the new year, we'll probably start seeing more action in the new year. That's not a guaranteed, but it seems like everything that I'm looking at is pointing to a risk-off environment going into 2021. So be very careful, because most people might not be ready for an aggressive move to the downside. And if you're not ready for an aggressive move to the downside, that means you're not going to be ready for when to buy into that sort of dip. Because it's not saying that the market is at an all-time high. What I'm saying is it's overextended. I mean, the market is at an all-time high, but what I'm trying to say is I don't mean that it can't go higher, but it can't go higher without consolidation or some sort of a pullback to reset to make it a healthy move. Because the more vertical that this thing goes without breathing, with consolidation or a pullback, the more wicked a move to the downside could be. All right, everybody, the conclusion section, that was kind of the conclusion here, but I hope I really kind of drew the picture out going into the new year. I've been doing these market briefs just a little bit differently these couple of days, but, as I stated, yes, we had on the pring bottom Fisher, okay? We're starting to see that move higher. This can be a squeeze up, but remember the last time that happened at these levels, we totally corrected over. So what I'm waiting for is the risk off environment, and what am I using to tell me that we're going risk off? Well, I've been looking at the contraction of the Bollinger Bands, and we've been looking at the sell signal on the CPC, and we're also looking at this rate of change crossing above 0, as well as the rate of change on the lumber to gold ratio. We're not there yet, so we're still risk on at this particular point in time, but I hope this video really kind of helps you see that risk off move can very well be just around the corner, and I need everybody to understand that. I want everybody to be prepared, because you can make money if the market goes up, and you can make money if it goes down. And a lot of the times, if you want to make money, for the long term, you need to be able to minimize your account drawdowns, and you can do that by watching the risk off indicators. All right, everybody, that's all I got for you on today's market brief. Hope everybody had a happy holidays, and then we're going into the new year, so I guess the holidays aren't over. I will be seeing everybody here later. See you later.